Hello, I'm Imogen Bakra and welcome to The Year Ahead, a podcast series where we explore the big themes and events shaping 2025. In this episode, which was recorded in front of a live audience at a Year Ahead customer event in London, our specialists take a closer look at the rise of geopolitical risk and protectionism. They discuss the potential impact on supply chains and the inflation outlook and share their views on the big geopolitical flashpoints to watch in the year ahead.
Now, we're going to be exploring the theme of trade and geopolitics, specifically fragmentation, regionalisation and realignment, and potentially conflict in 2025. We're going to be exploring some very broad but very deep themes around the geopolitical risks we're going to be facing in 2025, the implications this might have for markets and for customers, and then looking at the potential for protectionism and fragmentation and what that's going to do to supply chains and the wider global trade landscape. So, two huge themes, and to help me explore that, Aastha Gupta is our European economist, so brings the macroeconomic perspective. In the US on the screen, we have Brian Daingerfield, who is our FX strategy expert, so again brings the expertise in the markets. We have Scott Livingstone, who is NatWest's international advisor and an expert in geopolitics and foreign policy. I'm Rowan Austin. I head the Trade Advisory and Origination Department at NatWest. So I think, Aastha, what we'd like to do first is to come to you, please, in terms of setting the scene about some of the patterns of global trade we've seen and what we're going to expect in 2025.
So, I think protectionism is not really a new concept, but it has really gained currency in the last couple of years, probably in the post-pandemic and post-election world. And obviously, the geopolitical tensions around us have not really helped us. It has weighed on the global trade growth. So, global trade growth has remained tepid in the last couple of years, averaging about 1%. I mean, it is expected to sort of recover next year, but again, these risks of geopolitical tensions and obviously Trump 2.0 is like there are downside risks to that. So the broad patterns that we see across global trade are that the basic principles of free trade, which have broadly characterized a multilateral trading system, have really taken a backstreet. I mean, trade is becoming more forbidding, wherein countries are using more sort of protectionist measures, and we are moving away from a free rules-based system, which was characterized by sort of low tariffs, to increased protectionist measures. And we see restrictive measures in all sizes and forms, where industrial policies are making a comeback. Governments are doling out subsidies to bring supply chains closer back home, and in exchange of higher costs, we have seen non-tariff measures being used increasingly. And we've also seen sort of a new set of protectionist measures which are related to environment. And I mean, sort of under the veil of going green, it's basically protectionism in the same sort of a way, but in a different sort of a packaging, I would say. And obviously it has its impact on global trade growth. But we don't really see apparent signs of deglobalization at the aggregate level. So if you look at the ratio of global goods growth to global GDP, that has averaged about 42% to 50%, and it's still expected to be range bound. But yes, we do see signs of trade fragmentation and trade diversion under the surface, wherein trade is fragmenting along geopolitical lines. We are seeing increased trade between geopolitically and geographically closely aligned countries as opposed to geopolitically distant economies. And obviously, these will have implications on supply chains and their resilience, and obviously would translate into higher costs.
So globalization not going backwards yet, but how would you characterize the potential risk of a trade war? Because there's a lot of talk about that in the geopolitical context.
I mean, obviously, given the geopolitical events and the global events that are after pandemic, Russia-Ukraine war, and obviously after Trump 2.0, we see that there are increased talks about and concerns around deglobalization and trade war. But we don't really see apparent signs of deglobalization yet, at least at the aggregate level. Yes, there are trade diversions. But yes, there are increased risks of trade war because Trump's rhetoric on trade policy is, big global sort of tariffs. And his aggressive trade policy centers, includes 10% global minimum tariff on all foreign imported goods. And it could go as high as 20%, as he claims it to be. And he's also talking about targeted tariffs of about 60% on China and some possible risks on Mexico. Obviously, he also mentions risk of 100% on tariffs on imported cars. So, in my opinion, the risks of a trade war are more likely with respect to China because the legal frameworks are in place, as we've seen within from the episode of 2018 and 19 trade war escalation. His sort of I would say his proposal of a global minimum tariff would seems to be more like a bargaining chip than really a credible threat because of two reasons, I would say. Because they're not WTO consistent, because WTO still believes in the rule of free trade and being consistent and being using this minimum most favored nation tariff commitments. And obviously, US has these free trade agreements as well with different countries. And so this global minimum tariff sort of risk don't really, stand.
Thank you, Aastha. So, Scott, I'd like to come to you next. You bring a different kind of experience to the room. What are you watching out for when it comes to geopolitical risk, and are you going to scare the heck out of us?
It's a really difficult situation we're in, and I'll pick up on the China thing. China is the pacing geopolitical issue of this decade and the next couple of decades, and I think we're on safe ground to say that Trump's approach will be tariff and trade restriction based. So trade war is politics by other means, trade war is politics by other means. I think there'll be some negotiations down from the figures, but make no mistake, I think that those levers will be pulled against China, and both in terms of a general sort of use of tariffs, but also this idea of really drilling in against restricting or slowing China's competitiveness in strategic technologies, quantum AI, biotech, space, etc. So we'll see that. Now, I think the point I wanted to land on what I think China will probably respond to. I think China have been expecting this for some time. So this will not be news to China. I think China is better prepared now for these restrictions and these challenges than it was in 2017. I mean, stockpiling gold, stockpiling a lot of hydrocarbons they bought cheaply from Russia. So I think China is ready to answer back. And we don't see as much coverage of that in the media as we see about Trump's intentions. I think we should brace ourselves for some reciprocal action. We've had a taste of it this year when China imposed restrictions on the export of some raw earth, some processed raw earth minerals. And I think we'll see something along those lines, but coming back from China. And then two other responses, I think, from China. One will be to take this protectionist narrative coming out of the States and play it back into the rest of the world, and painting China as, in a paradoxical way, as China as the guarantor of WTO rules and America as breaching them. So we can expect this to feed into this grand narrative that's competition that's happening. And then thirdly, I think we can expect to see China be quite energetic in picking off European partners. So I think we will see Europe coming under pressure from China to not adhere to knotted line across the Atlantic. And I think that will generate quite a lot of tension in Europe.
And how about Trump's specific attitude, sort of multilateral bodies? Do we think the UK has the potential to leverage the special relationship and do a deal with the US?
Okay, let's come to the special relationship. So I think I talk about Trump 2's so far from what we know of his campaigning policies and the flavour of his nominations for key jobs. If we extrapolate those, I think we can say that Trump has the potential to really alter geopolitics on a grand scale. But not because these policies, some of foreign policies are extremely consistent. The defense of Israel, the competition with China, for example, at the core are consistent. There's a difference in style, there's a difference in emphasis, and then there are some really big differences in geopolitics. Climate is one of them. We have a fundamental difference in outlook on climate mitigations. And again, I think that will put pressure on Europe. And then on European security, we have a significant shift coming down the track on US role in Europe with European security. Part of that will be a deal in Ukraine. And the other part, the longer term part, will be how does Europe deal with Russia? And the buck will stop with Europe, and that will generate additional costs and additional pressures. So I think those are the other big ticket items. I think there's a clearly anticipation of more trouble in the Middle East, and President Trump will have a different, probably more pro-Israel view than President Harris on that ticket. On this special relationship, as a former practitioner, it does exist. It exists in some fairly narrow areas of policy: security, intelligence, defense, those areas of extremely special relationship across the states. And that will continue, without doubt. The institutional relationships are so strong. In other areas, though, I think the British government will have some difficulty leveraging a special relationship with this administration. I think it will be a challenge, and I think the UK government will be inclined to lean into stronger ties into Europe, but nevertheless not want to see bridges with Atlantic burned down. So I think Keir Starmer and his team do have a really difficult year coming up.
And particularly given our focus is 2025, where do you see the other potential geopolitical flashpoints that are going to impact markets and what our customers see? What do we see in a crystal ball?
So the European security problem, and for me, the Ukraine war is a dreadful destruction in Ukraine, but fundamentally it's a European security issue. And as I said, I think Europe will be severely tested next year in finding cohesion, finding a strategy, and then finding the money to come up with a plan to defend Europe with a much reduced US presence. I think I think Donald Trump will have two major decisions to make in the Middle East very soon. Possibly one is happening now, but the second one will be: is there a political solution, and is he going to lean into it? So, is there a two-state solution in Palestine or not? And he will come under pressure from valued allies as he sees them. So, Saudi Arabia, for example, the Emirates. Other Arab nations will be lobbying hard for Trump to take that forward. So on the one hand, he'll have that. On the other hand, he's got some fairly hawkish figures, pro-Israeli figures in his cabinet who will be possibly arguing the other way. He'll have to make a decision because the geopolitical elastic that's keeping the Arab nations in a fairly stable position can't last forever. The idea of no progress at all on a political solution in the Middle East, it really isn't tenable terribly long into 2025. And then the other decision that's coming at him probably much faster is what to do about Iran after the recent situation, the recent developments from September onwards. Iranian defences have been significantly disabled and undermined. And there are hawkish voices, both in Jerusalem and in DC, who are lobbying for this is the moment to seize an opportunity to set back Iran in terms of its perceived threat to the region. And I think that decision will happen pretty soon, actually.
Thank you very much. So let's go across the pond now to Brian stateside. So Brian, Trump's been very clear on his intentions when it comes to trade and foreign policy, as have his aides indeed. How quickly can we expect him to implement? How fast and how far do we think he's going to go?
Well, thanks very much for having me. And in terms of how fast and how far he can go, I think Aastha really nicely summarized how we're thinking about trade in sort of two different buckets, where the trade push on China, the increase in tariffs on China, we think could happen quite quickly because Trump already has the authority in place from the previous trade war. You think about the Section 301 authority that Biden used as recently as this year to impose additional tariffs on Chinese imports, just as a reminder that the trade war infrastructure, particularly on China, is already in place. So we think that could be a very early risk. Whereas for a global minimum tariff, we think that's a longer slog and frankly feel like it's perhaps too blunt a tool even for the Trump administration. We know there's a clear incentive, a desire to reset trading relationships, but a global minimum tariff is too indiscriminate. We think it's too broad reaching. And instead, we think it's more likely that it would be used as a bargaining chip, as Aastha rightly said, that trying to push both allies and adversaries to the negotiating table to win concessions. We've already seen some signs of that with the UK, for example. There were reports in the UK media about whether or not they would be looking to potentially give some carrots to the Trump administration in order to try and avoid being part of that global trade push. And so from a trade perspective, thinking about the risk against China coming quite quickly, global minimum tariff maybe coming later, if at all, more as a threat more as a bargaining chip necessarily than an actual policy implementation. The risk here would be that if Trump wants to use the revenues, if Republicans want to use revenues from a global trade war as part of the offset for their tax cut plans, they would need to formalize that in legislation. And that would require actually having dollars and cents behind the potential revenues from tariffs. And so the risk to global minimum tariff is maybe larger if they try and actively pursue legislation rather than letting Trump move on his own on tariffs, which he certainly has the ability to do. He has the ability to do thanks to existing legislation.
Thanks, Brian. Now, can we also unpack what do you think the impact's going to be on the markets, on the wider markets in the US and across the world around the geopolitical impact of what the Trump administration might do?
Look, I think we've already seen quite a few of the impacts of Trump's election in markets. And I think the market's pre-election playbook, ours, and I think the consensus as well, has played out in some ways and not in others. The most obvious ways that we've seen it has been a stronger dollar, as markets expect an expansion of the trade war as potentially more harmful for growth expectations for export and manufacturing-oriented economies. Think, most non-U.S. economies relative to a consumption and services-oriented economy like the U.S. So Trump's foreign policy and trade policy widening trade divergence. At the same time, higher inflation expectations and expectations of fresh stimulus in the U.S. at a time when growth is already generally outperforming most expectations. This consumer has continued to show resilience in 2024 once again. So we've seen in combination, the markets have priced out expectations of Fed easing on the back of Trump. And so that's contributed to a stronger dollar. And while we've seen higher interest rates across the curve in the U.S., I think one of the more perhaps surprising elements of this post-Trump reaction has been that we've seen more of a parallel shifting yields higher across curve points rather than a bear steepener, which I think was the consensus going into the election, that you would see potentially higher term premium and higher deficits as a piece of this puzzle of pushing rates higher, more so in the long end. That could still be coming as we go into next year and see how Trump's policies translate from campaign into actual implementation. And I think that's going to be the big risk, which is markets are already pricing in some amount of Trump's agenda. It's very difficult to get a sense of how much we are already pre-priced for Trump. We certainly adjusted a long way already. But if you were to say we're 90% through that story, that Trump is 90% priced, then maybe the risks to a continuation of this move are perhaps lower. But if the market is less than that, if you're talking about only 20, 30% of Trump sort of being priced in at this point, where Trump goes beyond market expectations in terms of what he actually delivers on tariffs, what they actually deliver on stimulus, then these moves might have more room to go. So I think investors are going to have to spend quite a bit of time over these next couple of months and quarters trying to get right that mix between how much of Trump is in the price versus how much implementation is actually going to come through when he takes office in 2025.
Thanks, Brian. And I've got a specific question as well around, we think that Trump is going to implement pretty quickly. Do we think the US corporates are going to race to import, to build inventories before the imposition of tariffs? And is that going to be a short-term trend we're likely to see?
It's a good question. And we do have some anecdotal evidence that could be happening, not just in the current situation, but also when Trump was first elected in his first term. There were some signs of that. I believe the IMF did a study that suggested there may have been some of that type of activity. But look, for corporates and US businesses, you're going to have to balance inventory buildup against expectations for the US economy, right? This is always a question that businesses are facing when it comes to how much inventory you want to carry, which is how strong do you think the US consumer will be in 2025? This consumer has proven very resilient, but if you build up inventories in anticipation of a more expensive imports, but it turns out the consumer does see a more meaningful downturn in 2025, then that could lead to inventory gluts above and beyond what you would have already planned for, in a sort of pre-tariff era. And so I think businesses, that's one of many challenges that businesses in the US will have to face. It's not just about the cost maybe being higher for imports. It's also about how do you respond in terms of, is this consumer strong enough to take additional price increases? Will businesses be able to pass through price increases from tariffs onto a already price-sensitive consumer? That remains to be seen, and that's going to be a challenge as well. And then, of course, there will be questions about reshoring as well, friendshoring. What is the status of your supply chains? Are you willing, are businesses writ large willing to move more production back to the US or back to other friendly countries in order to try and avoid tariffs, or whether that is a policy that might not make a lot of sense in this environment because there's an expectation that maybe globally tariffs will be rising rather than just specifically towards one or two countries, with China being an obvious example here. So I think the idea of pre-purchasing, pre-inventory build is just one of many challenges that US corporates will be facing as we look ahead to how Trump impacts the outlook.
Great. Thanks, Brian. We touched on it a little bit, but to what extent do we think that supply chains are starting to be reshaped by geopolitics? Do we have a view in terms of sectors? We've seen a lot of talk and action around reshoring, friendshoring. So, Aastha, maybe we can start with you.
Yes, we've seen that, geopolitics has played a role, I would say a very important role in shaping how trade is being sort of driven. We've seen that there are sort of three blocks that have been formed. One is more US aligned. We've also seen sort of China and Russia aligned in terms of trade. And then there is this third group of non-aligned countries which do not want to pick sides. And obviously with Trump 2.0, it's a very difficult position for them to actually take sides, because for them it's important to, gain market exposure rather than choosing sides at this point in time. But yes, all of these implications have sort of, on your supply chains and your costs. And what we have really seen is that countries and companies are preferring sort of resilient supply chains in exchange for higher costs. So that is one thing. And obviously, there are certain, obviously it's not like a overarching sort of a theme, but there are sort of sector specific examples or industries which are more prone to such risks and sort of movement of supply chains. And the tactical competition that we have seen amongst countries to gain dominance in specifically technology driven trade. So the two sectors which are most exposed to these sort of transitions are semiconductors, and obviously within semiconductors we've seen electrical vehicles. And in the post-pandemic world, we saw that chips, which actually are a really key input in all things that we actually use in and day out. So countries are trying to get your supply chains closer back to home, closer back to their allies, and obviously, these do result into higher costs. So these are the two, and so much so that chips are now being referred to the oil of the 21st century. So these are the sectors that are more prone to such risks, I would say.
And Scott, can you bring a sort of defense, maybe national security perspective to that?
Well, I think that is, for me, that is the defining criteria. If we see a supply chain that is linked to national security interests, with high-end chips being one of them, but the other ones I've listed, quantum AI, space, we mustn't forget biotech, by the way. I think it often gets undervalued. But the national security implication for that will put those supply chains into the decoupling category, actually. It may not be a question of de-risking or friendshoring, it could be homeshoring, because the need for sovereign, reliable supply chains will overtake the price criteria. otherwise, yes, it's friendshoring in this new form of globalization. And I'd really welcome your third category of countries, which I agree we haven't rehearsed. I totally agree with. And I hope you're talking about countries like India, for example. I think this benefits India because in those other sectors, then there's opportunity here actually and again to be multi-aligned rather than in the last Cold War. India was the leader of the non-aligned movement, but frankly, a multi-aligned leadership coming from countries like India.
Great, thank you. Okay, couple of minutes left, so quick fire questions, specifically on, are there any silver linings or positives on the global trade and geopolitical front to look out for? So, Brian, come to you first. In the States, any silver linings?
Sure. I would say that in terms of from a humanitarian perspective, I think if Trump's victory sees an end to active conflict, whether it be in Ukraine and Russia or in Israel, Gaza, that's something that could be a silver lining behind these changes. Another one, I think, maybe a broader point is that U.S. voters gave a distinct direction of travel in terms of the direction they want U.S. foreign policy and geopolitics to move. Of course, this was an election about the economy and about inflation, I think primarily, not necessarily about foreign policy, but voters gave Trump a mandate to change these economic relationships. And so, the signal from the Trump administration is also the signal coming from the voters. And so I think it's encouraging that there isn't necessarily a conflict that, Trump won with maybe a looser mandate, for example, and that, our allies and adversaries alike can adjust correctly to sort of this new backdrop we have where the Republican Party has shifted decisively in the Trumpian direction in terms of trade and protectionism. They sort of outflanked Democrats on that front, and that there really isn't a sense that this was a win that was telling us that Trump shouldn't be moving as far in this direction. I think it's consistent.
Great, thank you, Brian. Aastha, over to you. Any positives for 2025?
I think to his point I think there's an opportunity for these connector countries or non-aligned countries to actually plug in the gap, as we've seen in the case of US and China. In 2018, we saw the experience that Vietnam and Mexico were plugging the gap. So we really haven't seen US and China decoupling. We've seen diverging. So I think there are opportunities for countries like India, Poland, and few other South Asian economies to actually plug in the gap and be the gainers in this, be more multi-aligned rather than choosing sides.
Excellent, thank you. And Scott.
This is the question that I always get, is there any good news?
Yes, good news, please.
People say I'm never ever reading a bedtime story to the children. Good news. So yeah, I go with Brian. I'll come back to Brian's point about the humanitarian. It depends on where you are. If you're in India, Turkey, Saudi Arabia, then there's potential coming up, places like that. I think we would be having a very different conversation here had the US election ended in a contested way, which was a scenario. It certainly was for us. We had built it into a scenario plan. If the Western democracy had really come under pressure in a contested US election of civil strife, long running legal claims and everything else, then the shudder around the Western liberal order would have been noticeable and it would have been profound. That's not the case. There's been a decisive result in the States. The election process has been unquestioned. And on the back of the Indian election earlier on this year, then we do finish the year with the idea that there is something about democratic process. I know there are flaws elsewhere. If you're in Georgia, that's been not so successful. But profoundly, we're going into next year with Western democracy at least having got through this year. My final point, and as a pantomime villain, I should add it to Brian's, but Brian's absolutely right. Should we see the end to wars, then fantastic. The devil's in the detail, really, of ending wars, because it can lead to more wars elsewhere. And if the idea that deterrence has failed, that the Western order or the global order in terms of the UN is powerless, then other people, other actors around the world will feel empowered or could feel empowered. So yes, ending a war is absolutely a humanitarian good. But the manner in which it's done could have global implications for other countries.
Thank you. And we will end there. We're at time. So if you'll join me in thanking our fellow panelists. And Imogen, we'll hand back to you. Thank you.
Thank you for listening. If you like what you heard today, please make sure to like and subscribe to our channel and navigate to natwest.com/year ahead for more insight into the big themes and events shaping markets and the economy in 2025.